The United States has a credit card with a $14 trillion balance. Every day we pay $74 million to China alone just to pay the interest we owe them, and they only represent 12% of our national debt. Wouldn't it be nice if you could just print money to make your own credit card payments? Well, that's what the US government does. The problem with that is every time our government prints more money, our dollars become less valuable. And that is why the US dollar is destined to fail. Within a decade, a loaf of bread might cost $23 in the grocery store. A package of sugar might run $62. Orange juice could set you back over $45. In 5 to 10 years, when each of your dollars is only worth 10 cents of what it is today, what are you going to do? You need to plan ahead, and if you do, you could become extremely wealthy. If you found an Egyptian tomb from over 5,000 years ago, what do you think you'd find in it? Millions of dollars in cash with the pharaoh's face on it? Or millions in gold? Gold was considered divine and had great significance to pharaohs over 5,000 years ago. If you found an Egyptian tomb today, it would be filled with gold, not paper money, gold. Gold has worked as a reliable monetary system all the way from ancient Egypt to Rome and even up to 1971 in the United States. In ancient Rome, an ounce of gold would buy you a suit of armor. In 1900, it would buy you a gentleman's suit. Not much has changed over 1,000 years. Said the widely respected Bernard Baruch, when something holds good for 2,000 years, I do not believe it can be so because of prejudice or mistaken theory. Today, an ounce of gold will still buy a fine designer suit. Depending on the designer, you may be able to buy up to 3. An ounce of gold in 1900 represented 20 US dollars. In 1900, 20 US dollars would buy you roughly 200 loaves of bread. Today, 20 US dollars would buy you only 6 loaves of bread. However, today, 1 ounce of gold would buy you 575 loaves of bread. Do you see the difference? Nowadays, a $20 gold piece from 1900 could cost as much as $3,300 depending on the quality of the coin. Up until 1971, all US dollars printed were required to be backed by gold in federal vaults, until President Nixon abandoned the gold standard. Since then, the US debt has gone from $414 billion to $14 trillion, and during that time, the US dollar has lost 97% of its value. If you would have put $10,000 into gold in 2002, it would be worth $63,000 today. That's over a 600% return on investment. In 2009, for the first time in over 30 years, central banks all over the world began to purchase gold for their holdings. They see the writing on the wall. India was the first central bank to make a major gold purchase and ended up buying over 200 metric tons of gold from the IMF. Many analysts believe that China will increase its official gold reserves to equal those of the US. In recent years, the Chinese government relaxed the rules for its citizens to load up on bullion. This implies the expectation of a strong future in precious metals. With China's population more than 20% of the world's total, this could easily become a self-fulfilling prophecy, especially given the tiny size of the PM market compared to other commodities. Some of the largest institutions in the world are buying gold. Companies like Goldman Sachs, JP Morgan, and Morgan Stanley. Additionally, some of the largest investors in the world are putting billions of dollars into gold. And this list includes Soros, Paulson, Kaplan, Rogers, Einhorn, Klarman, among others. The price of gold could hit $2,400 based on monetary expansion, and as high as $4,000 per ounce based on projected overshoot, says David Einhorn. Since the year 2000, gold has outperformed the Dow Jones, the S&P 500, the NASDAQ, bonds, mutual funds, real estate, and virtually every paper asset from currencies to subprime mortgage bonds. Gold is one of the only assets that cannot be created. It has to be mined and pulled out of the earth through a natural process. All of the gold ever mined throughout history, if refined to 0.999% purity, would only be enough to fit 2 Olympic-sized swimming pools. So the real question is, when it all falls apart and your paper dollars become virtually worthless, will you be ready? Will you own gold? To request your free gold investment kit and learn how to protect yourself from economic collapse, please visit goldbackedira.us or just click the link below. Thank you.